Hey everybody, so we're going to talk about bonus depreciation in this video. I did a video, a couple days ago on the new rental home, the fourplex that we are buying, breaking down the cost segregation and the bonus depreciation in hopes that this bill would get passed, to show you how the numbers work, to show you why it was such a lucrative number, to show you why real estate investing is the number one legal way to write off taxes and to win. You got to think, when you purchase real estate as an investment, not your personal residence, but as an investment, and you purchase the right real estate, right? Arguably, you should have some type of cash flows. You should be making money monthly. Now, again, there's expenses and all this stuff. So, you know, when you see these gurus say, oh, I own 10,000 properties and I only make $200 a month, blah, 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 like, I don't know you're profitable that way. Again, on paper, yearly. So, but what the big thing on real estate is you get the depreciation. So you depreciate the asset over 27.5 years per the tax code. But you have the bonus depreciation, which is what I'm talking about in this video, that allows you to do a cost segregation study, which allows you to typically write off around 25 to 35% of the dwelling value in year one. So again, let's just say 25%, you're buying a $400,000 dwelling value. That's a $100,000 write-off year one. And then, of course, the rest depreciated over the course of so many years. But then you also have in real estate, right, the thought is real estate, you know, appreciates, but also goes up in value, so you win 3 times. But bonus depreciation is just more than real estate. And that's what I'm going to talk about. That's what I'm going to explain here. And full clarity, right? I'm not a CPA. I'm not a EA. I'm not any type of tax professional, but I am a YouTube nerd that has my doctorate from the University of YouTube over the last like 5 or 6 years, where I just nerd out learning stuff. And I listen to different people. I don't listen to one person on one topic. When it comes to taxes, I listen to 5, 10 different people. And I basically kind of put 2 and 2 together, figure out like what's true, what's not true, who's BSing, who's not BSing, and then validate it with my own research on. You can listen to 2 different tax professionals, and one can say you can write this off, and one says you can't. So my thought has always been, and I've changed tax people the last couple years. You know, I just outgrew my first person, who was an awesome guy, but I just outgrew him in what we do in investments and stuff. You know, if I was still doing then, I would still be with him. And then with a company that was super large, even like famous on social media, and was very costly, but I learned a lot with them. I saw how the game was played. I learned all the tips and tricks and ways to do things legally, of course. But the customer service sucked, I'll be honest, and they were just so expensive. And now I've kind of settled with a local firm here in Knoxville. Well, they're based in Florida, but they are, you know, boots on the ground here in Knoxville. And I kind of gave them the test, because I will say I interviewed a ton of CPAs and kind of enrolled agents as well, to see who I wanted to go with, because I wanted somebody locally. And, you know, this company was and the girl is kind of like runs my account. She was the only one that could talk shop with me, and understand everything and verbiage and everything, and like knew everything, new cost segs, new depreciation, new 1031 exchanges. And it's like, hey, here's what I'm going to do. Is there a way for me to write this off? And now most CPAs are just like, no, you can't do it. It's like, well, Stephen, you know, is there a way to legally write this off? And I'm not going to say like, yeah, let's just like stay in the gray. But it's like, hey, is there a legal way to do this and write this off? And there is a lot of stuff, right? You know, I'm not really big on work-life balance. I know some people are. I'm not. I kind of like work evolves around my life, I guess. So for me, and owning now multiple businesses, I have the advantage of being able to write off a lot of things. However, it has nothing to do. One thing that I had to get in my mind, it took me a couple years, was, oh my gosh, I shouldn't be writing this meal off with a client because it's $250 meal with drinks and we're talking business or another business partner, all that. You got to think, billionaires, that is nothing. They're going out here and doing $25,000 dinners. That's for business, right? And in the pursuit of income. So it had to twist that mindset of like, I need to play the same game they are. Oh my gosh, like we throw our party every year in like February or something. It's around there. And this costs thousands of dollars, what I pay for my agents, and we bring their spouses in and we do awards and we do all this, which is a business expense. But it's like mental, it's like, oh my gosh, like, geez, is this early on? And yes, it is. But you got to think, for other people, like for other huge companies, like this is a multi-million-dollar event. I remember when I worked for Leaf Filter. Sorry to go on this long tangent, but it was like my first year working for Leaf Filter. They flew everybody and their spouse up to Washington, D.C., put us in the Ritz-Carlton, did our event at, I forget what it was, but like the historic museum with like the dinosaurs or something. Crazy stuff. Like who knows how many, hundreds of thousands, if not into the millions that cost them, to bring in like well over a couple thousand people, it was like. So, all right, we're back. So bonus depreciation, right? Sorry to go down some rabbit holes, but if you watch my videos, I do that from time to time. Bonus depreciation is a lot more than real estate. And really, it's probably used less in real estate because there's not here so many real estate transactions, because you're spending hundreds of thousands, if not millions, versus, going over here buying a vehicle, going over here buying a side-by-side, buying new computers and furniture and all this different stuff, right? So let me explain, right? If I'm an agent, right? If I was a new agent, and I haven't even formed my LLC yet, I've not even formed a business. I am a sole proprietor. I am a 1099. Real estate agents are 1099 employees. So really, there is really no benefit to being an LLC. There's like two small benefits I can think of: Augusta rule and taking a kind of a trip for like a board of directors type thing every year. You arguably get a write-off for your board of directors meeting. Other than that, there is no benefit that a business has write-off wise that you as an independent contractor, sole proprietor has. So let's even dig into that a little bit more, right? You got a real estate 1099. What if you mow grass? Do you mow grass for your neighbors and 4 or 5 other people? You are a 1099 business. Now, are you reporting it? If you're not reporting it, you better not try to write something off on your taxes for doing it, right? So if you're reporting your income and you go out and you buy, and I've just found this out recently, apparently because my insurance company, we've got 2 policies for 2 people who do some mowing. This is brand new policies like the last 2-3 months for us. And there's like a $12,000 lawnmower and like an $18,000 lawnmower out there. I didn't even know they make lawnmowers that expensive. But anyways, bonus depreciation allows them in year 1 to go ahead and deduct all $18,000. So what that means, let me break it down there a little bit. If I bought an $18,000 lawnmower and I own a lawn mowing business, I can now deduct all $18,000. So what that means is you can make $18,000 of profit in your business and pay 0 taxes on that, right? That means so I spent $18,000, and again, not a CPA, it's a little more complicated than this, but really not. So I get deduct $18,000, so now I make $18,000, so guess what? I'm in a 0. I didn't make any money, I didn't lose any money, I pay no taxes on that. So what a lot of people don't understand about taxes, and they talk about tax write-offs, all right? Tax write-offs, all it really means is when you make a certain amount of money, if you made $100,000, and I don't know this for sure, but let's just say you're in the 24% tax bracket. If you make $100,000, again, a little more complicated than this, but I'm going to make it an easy conversation. You're going to pay $24,000 in taxes. You're in the 24% tax bracket. Well, if you bought a $30,000 or $18,000 lawnmower, all that means is basically you get deduct 18 from the 100, right? So now you are at $82,000. So you still pay taxes on $82,000. You didn't get a $18,000 tax credit. A lot of people get tax credit and tax write-off mixed up. It just means you don't pay taxes on that amount. So you still got to spend that amount. Here's the thing, right? I spend $18,000. I make $18,000. I just don't pay taxes on it. So realistically, it's only a couple $1,000 savings based on what you would pay taxes on. However, that stuff adds up like crazy. Jesus, it's getting hot in here. Actually, let me go back to that. It's fine. That stuff adds up when you're getting into the hundreds of thousands and the millions of dollars whenever you're buying stuff. And it's always basically, there's all kinds of codes and tax codes and all this stuff. But a big one is, are you doing something in the pursuit of income? Yeah, I need to buy a trailer for my lawnmower to transport it, right? Oh, actually, my truck's broke down. I need to buy a vehicle to now transport my lawnmower and everything. Oh, geez, I need to pay for gas for my lawnmower. The gas, deductible. Now it's already deductible. But so the bonus depreciation is really more about buying assets, large assets, that otherwise the government is going to depreciate over years. So I'm going to give you an example, and I don't know how long a computer is written off, but let's just say you bought a $3,000 computer. Let's say you are a programmer and you run your own 1099 business, right? You're a consultant and you do digital artwork on Fiverr.com for people. You know, hey, you need this $3,000 computer. Well, before, if the bonus depreciation is at zero, the government's going to say, hey, you get to write that off over 5 years. So let's just say you spent $3,000, you got to divide that by 5. That's how much you get to write off every single year, which is not fantastic at all. You got to spend the $3,000 anyways. But with bonus depreciation, year one, you get to write off all $3,000 of that investment, which is very nice. So there's a lot of things that fall into the category of bonus depreciation, such as, for us, like we do a lot of land contracts. And there's a lot of land out in these areas. I'm heading out to Wartburg to go show a home. There's a lot of land in Morgan County that, you know what, I'm not going to go out and walk 10, 20, 30, 250 acres of land. So let me buy a side-by-side as a real estate agent, a side-by-side. And you know what? I need a 4-seater because I need to make sure I transport my clients around the property so I can show them properties in my side-by-side. That's a legitimate business expense. Now, what you get off to, if I used it for personal reasons, then arguably I can't write off 100% of it. But let's just say for me, right, I've been side-by-side riding one time in the last 10 years, right? So, is there a chance that I might go if I had one, maybe once or twice? Sure. But it's still going to be used probably 80 to 90% for business purposes, which is then allows you to kind of get the write-off. There's all kinds of things, that you could go into. Whatever business you're in, you're a plumber. You need a van, I'm seeing here, a van with a ladder, and then you need to buy all your plumbing equipment. You need to buy a certain saw because you're a contractor. You need to buy more trailers to haul stuff. You need to buy a bunch of side-by-sides because you want to open up a side-by-side rental business. All those are year one write-offs. This is, as I said in my personal post, huge there, and it's in perpetuity. It's forever unless they go in and change it. But this is forever, which is just crazy. And the thought behind this is when you allow business owners to write things off, they will continue to invest in the economy, to grow the economy, because they see the financial benefit. You know what? Let's just say, for example, my tax bill is $100,000 this year. I said, man, my tax was $100,000. So you know what? Instead of giving all that back to the government, let me go out and spend $250,000 on buying assets for my business that can arguably make me more money, make me quicker money, be more efficient, whatever it is, nicer things. Let me go out and do that, and then I will be able to then have basically, have no $100,000 tax bill. So arguably, I saved by spending $250,000, and again, I'm making this number up. I may have saved $100,000, but I still had to spend $250,000. So it is a great thing, but a lot of people is like, oh my gosh, billionaires, they don't do this. No. This is where, sure, do they sit around and pay like income taxes? Not so much, right? Because they know how to work the system. The system is a system. It's in writing. They get to do it. No matter what side you're on, they all work the system. They're all friends. It doesn't matter. But where they do pay taxes on is they employ thousands of people. They pay taxes on all those people. They also buy tons of assets. They pay taxes on all those assets. They go out and they do dinners and they rent out places and they do parties and they pay tons of tax. I mean, they pay millions and millions and millions of dollars in taxes every year, just because it doesn't necessarily come out of that, because they want to work the system. You gotta think, they had the ability to change this stuff for the last 4 years, and they didn't. There's a reason why. It's because the people who are donating to everybody is saying, you better not change this shit, because I want to, make as much money and be as powerful as I can. But that's the thing. W-2 people. Let me talk to W-2 people real quick. I've said this so many times. W-2 workers pay taxes. You don't really have any tax benefits being a W-2 worker. You better go open up a lawn mowing company, and then therefore you get your taxes, right? You need to go out and buy a $1,000 new iPhone for your lawn mowing company, write off. 100% bonus depreciation, all $1,000 written off, because you need a way to communicate for your lawn mowing company. Boom, write off. All the assets, lawn mowing companies is just the easiest to kind of mention, that, man, you could really go out, buy all this stuff, year one, not pay no taxes, and basically kind of pay yourself back by buying all the assets. So, not a tax professional, not a CPA, not a EA, but boy, you need to learn this stuff. It's all on YouTube. That's all I did. YouTube and podcasts. That's how I've learned all this stuff. And now, I would feel confident going into and talking with CPAs on tax benefits, tax write-offs, how you do things. Boat, where it is. Yep. So, you know what? You're a real estate agent. You show lake homes. You want to give a client a view from the lake, right? You're keeping logs. You know all the proper stuff. Boat's an investment, right? Because you can use it to generate money. Boat write-off. There's just, everything is an asset. Not everything. A lot of things are an asset. So that is the bonus depreciation. And boy, is it powerful. And boy, is it really going to grow our economy. Because now, instead of paying taxes to the government, I am strongly encouraged to, actually, it's probably a good time to go ahead and buy that side-by-side, which I will. I'll buy a side-by-side this year. It's going to make showing property so much easier than trying to coordinate with somebody else with a side-by-side. Or I'm just getting too old. My knees are getting too old to hike up and down these mountains and all this stuff when I can just pull up. Oh, guess what? I'm driving a Camry right now. Dang, I'm going to need a truck to pull my side-by-side, right? Again, asset, write-off, in the business name, 100% bonus depreciation. Oh, crap, I need a trailer to pull, to load on my side-by-side to pull with my truck. So now here's all these assets that I'm acquiring and being able to write off without paying taxes on it. So, if you have questions on insurance and real estate, I'm always here to help. I don't want to say like questions on your taxes. I'm not going to do your taxes or anything like that. But you got to watch. Like CPAs, they're there to file your taxes. These are not tax advisors. They're more there to file your taxes. Do all this research on YouTube and then take it back to your CPA or find another CPA that's actually a tax advisor, enrolled agent. That's somebody who can really help you. If you're a W-2 worker, just go to TurboTax and file your taxes. You don't need no CPA or anybody to file your taxes. You're a W-2 worker. There's not much that you can do. TurboTax will do it all for you for free or cheap. So, hope y'all have a great day. See ya.